Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time. Hey, I wanted to talk to you about home prices. I am not oblivious to the fact that we've had some month-on-month declines in home prices. I happen to live in a part of the country that saw the largest price declines month-on-month. So I wanted to talk about that. I wanted to share an article with you. I wanted to go through the details and talk about my expectations for the rest of the year and 2023. So we're going to look at an article that was sourced from Black Knight Metrics. You have heard me undoubtedly talk about Black Knight a lot the last year. I like statistics that come from Black Knight. They seem to be very unbiased, and they also have historical relevance, right? It's not just, hey, here's the number, but also here's the number in context of history or seasonality, which is something that you really need to understand in real estate investing. So what I want to do is pull up an article. I believe this one is on CNBC, but it's sourced from Black Knight material. We're going to review it together. We're going to break down what's behind the article, because I do think there are things not said that would be relevant for you and I to discuss. Just to be clear, I am still calling for no price decline, no national median home price decline in 2022 on a year-over-year basis. I haven't changed my opinion. I think the last year-on-year report was 10%. I think it's mathematically nearly impossible for that metric to go negative this year. Real estate just moves slower than that. But that said, month on month is interesting to look at. It's the third variable I look at. First is your own buy box day to day, then year on year, then month on month. Otherwise, you can get some seasonality wackiness to it. So let's bring up the article. Let's go through it, kind of, what there is to see. So again, the first thing to highlight that I look for when I'm looking at articles are trend breaks, right? When there is a divergence. And as you can see in this headline, we had a clear divergence in July. July was the first month-on-month decline in 3 years. I would be a fool not to recognize that. So yes, it does look like there was a decline on a national level. So let's get into the article. First, a couple of summaries. First and foremost, the decline from June to July was less than 1%. It was 0.77%. Again, this is the first monthly decline in 3 years. And again, Mortgage or Black Knight, again, is a firm that seems to just be about the facts, right? No opinions, no bias. So I like it when they are the source. While this drop may seem small, it's the largest single month decline since 2011. So let me just tell you about 2011. That was kind of the steep drop, right? I've been buying since 2002, did a lot of buying in 09, 10, 11, 12. So to compare the drop that we just had at 0.77 with 2011 gives me pause. Because that was a bad time. I remember 2011. It was, the world seemed, at least the real estate world seemed to be falling apart. Also, it's the second worst July performance since 1991. Again, I'm one for history. I have a 50-year spreadsheet. So this goes back 30 years. Again, divergence, one-offs, non-seasonal, that kind of stuff catches my attention. And according to Black Knight, this is something I should look at. Next, it looks at further price corrections are likely on horizon as the move into what is typically a neutral season months of the housing market. What is that? What that is saying there is, historically speaking, September through really February, March are slow seasons. We have seasonality in housing. Calling a price decline from July to August, for example, doesn't take a rocket science. It's historically significant. It happens pretty consistently. Also, my big concern, again, looking at seasonality, is actually this inventory flux that you and I have seen, you and I have wanted, is actually going to disappoint. And I don't know what that means, but I do think inventory will likely disappoint. So let's get into the article. Let's go through it together. So again, home prices declined from June to July. We talked about that. Largest decline since 2011 at 0.77. It is the second worst since 1991, when in July it declined 0.9% in July of 2010. Again, I was an active investor in 2010. I believe 2010 was our most active year. So again, any comparison today to 2010 gets your attention. The thing to hear is the sharp rise in mortgage. Whoops. I hate it when they add these ads. Here we go. The sharp fast rise in mortgage rates this year caused an already pricey housing market to become even less affordable. You saw me yesterday talk about affordability in California, and it has dropped quite significantly. Home prices rose sharply during the first years of COVID. Demand was incredibly strong, supply historically weak, and mortgage rates were more than a dozen record lows. It's kind of the world we came from. Now housing affordability is at lowest level in 30 years. Not quite accurate, at least for California, right? We looked at the housing affordability for California. Again, please look at your own metrics. This is from memory. I think California was like a 16 out of 100. In 2005, I believe it was 11. So it's bad. I'm not saying it's not bad. It is absolutely bad. It is absolutely horrible, but it's not a record. 2005, 2006 were less affordable. Not saying it's good. I'm just putting that in context. Again, affordability is a problem. We've talked about that a lot on this channel. It is one of the reasons why I think the housing transaction crash is happening, because we lost a lot of able buyers. So this again is from Black Knight. We've been advising for quite some time the dynamic between interest rate, housing inventory, and home prices was unattainable from an affordability perspective. And at some point, something would have to give. The Vice President of Enterprise Research at Black Knight. We're now seeing exactly that. Where is it? There we go. Exactly that, by providing clear evidence, a significant inflection point in the market. Yes, again, I look for deviations, diversions, inflection points, if you will. Again, Black Knight is someone I trust. And the other thing that I thought was really interesting, again, Black Knight gives historical context, was this line. Prices historically rise 0.4% June to July. July being the last kind of hurrah for the summer season, typically has the biggest homes, hence takes the median higher. So not only did we see a 0.77 decline, we saw a decline where we normally are positive. Again, this kind of stuff catches my attention. And again, here, Black Knight gives you the history, right? Because market is heavily weighted towards families buying larger and more expensive homes. Again, this is why I like Black Knight, because they also give you the historical context. There are lots of firms that just give you, hey, foreclosures up 400%, but they don't give you the context or the true story. Again, that is one of the reasons I like Black Knight. Even during the Great Recession, home prices typically rose marginally from March through May. Again, seasonality is a thing in real estate. All the declines in the era happened from July to February. So again, we are heading into the slow season, right? Historically speaking, July is the last hurrah, right? 0.4%. We are heading into months that are seasonally slow. We should expect median price in many markets to show weakness. Some local markets are seeing declines even faster. Again, I mentioned I live in Santa Clara County, which is home to San Jose City. Largest decline, wow, 10% in recent months. Seattle down 7%, San Francisco 7%, San Diego, Los Angeles, Denver. Some pretty significant drops in some high-priced cities. We do need to realize that home prices were still up 14.3% July on July. This is according to Black Knight. Again, I tell everyone, look at your buy box daily for your metrics, then year on year, then month on month. Again, the call for 2022 is no year on year decline. Again, here's something we need to watch. The average rate of the popular 30-year mortgage a year ago was around 3%. Now it is up and heading towards 6%. When I read articles like this, when I look at all the history, I think there's a couple of things. Let me stop sharing. One, We are without question heading into seasonally weak part of the year. Black Knight tells us that. You've seen it historically speaking if you bother to look. We need to watch inventory. I think we've seen the inventory pop. Remember, we talked about July 20th being that date that shook sellers and made them list. Too many of them put them at wish prices. We're starting to see cancellations and listings come off. It'll be very interesting to see if inventory flattens or goes down. I think a lot of people, if you're in the housing is going to crash camp, you must also think inventory is going to keep going up, whether it's job loss or foreclosures or iBuyers or Wall Street or whatever it is. If you think prices are going to crash and crash quickly, I think you also believe inventory goes up. I don't see it. I think people are going to be surprised that inventory goes down September, October, November. Again, seasonally speaking, it's kind of what happens if you've bothered to look at the charts. I do think there is a wrinkle. We have learned that 6% mortgages is a problem. I believe the Fed is on a path to do a lot more interest rate raises. And I fear that 7% 30-year mortgages are in our future next year. 7-year fixed 30-year mortgages probably means ARMs are in the fives. I think a 7% 30-year mortgage is a problem. I think if we stay around 6%, it's bad. It's slow. Transactions crash. But we don't materially see median home price fall, nationally speaking. We will absolutely see Phoenix and Vegas and San Jose, San Francisco fall, but not nationally. Nationally, folks, many markets are still hot, like pretty much everything in Florida. So again, it is not lost on me that July was off trend, right? Historically speaking, typically up 0.4% month on month. It was down 0.77. It is not lost on me. It was the second worst year since 91. I still do not see national median home price crash year on year. Believe me, it would be a lot easier for me to say, hey, I was wrong. It's all falling apart and crashing. I think the channel would grow if I said that. I just don't see it. I don't want to be intellectually dishonest. So that's what I see. Again, Black Knight is someone I trust. I will definitely read their articles, their data source. Check them out. And of course, have a wonderful day. We will do the daily financial news in just a couple of minutes. Bye.